Welcome back, and joining us for a look at the equity scene is Makwe Masilela from Makwe Fund Managers. Thank you so much for your time, Makwe. I can't really gauge how markets are taking in the Fed's decision to hold interest rates because you're seeing the JSE slightly in the red, but those US markets, of course, yesterday they were quite mixed, going into green territory today. So what did you make of the Fed's monetary policy meeting?
I think the knee-jerk reaction, as we've seen overnight in the US, was for the markets to tumble, and as much as we also had to open in the negative. And remember, I think the markets basically they failed to bully the US Fed, and I think we just overreacted because this whole issue that March is not going to be happening, it has been, there. The writing has been on the wall, but yes, markets be markets. They will try to twist your arm, but so far, yeah, failed to that. But the good thing is that the Fed managed to cement that they've almost reached a peak. If that's the end of increasing interest rates going forward. So we're all waiting for anything to show us that they'll be taking them down. And they're not ruling out that it will still happen this year. But the question here is that I think we expected a lot too early, but the guys are saying, hey, we'll still manage to cut. European Central Bank, when they said their press conference, also indicated the very same point. But now, those labor data that we got later in the session, I think it helped markets manage to recoup all, if not most, of those losses because it indicates that the labor market is cooling and that is ahead the most important report, which is the job numbers that will be released tomorrow.
Yeah. It's quite interesting what you say that the markets failed to bully the Fed because obviously markets really wanted the Fed to kind of signal that they'd be cutting in March. But it's also quite interesting that you say that markets were also maybe sent into green territory because of the softer labor market data that we got today, which is quite interesting because yesterday Fed Chair Jerome Powell said that, you know what, growth and the labor market are not part of our mandate. Our mandate is inflation. So it's going to be quite interesting to see how the Fed actually responds to that labor data. And of course, we are getting that jobs report tomorrow. Let's come back home and look at the big news. Multi-choice. Early on this morning, we got a sense coming out that Canal Plus, which is a shareholder on MultiChoice, that they want to buy out MultiChoice, and that's a premium of 40% to its share price yesterday. Did this come at a surprise, or did the market see it coming?
It has been in the making. As we are talking, the guys, they own almost 31.7% of MultiChoice. And we know the guys have been showing some interest at some point in time. But so it's not a surprise to the market. But now it's coming at a point where when we know that this whole issue about media ownership is a sensitive issue. So now you ask yourself whether will they be able to get the necessary approvals. I must say, as a shareholder, I'll be happy to sell if I'm getting that 40%, premium. The question now is, will our authorities be happy to be able to pass that through? But anyway, should the guys manage to get this through, they'll have almost 50 million customers. But most importantly, for MultiChoice to be able to do well, they need scale, they need local and global expertise. And we can see that they've been trying with the Showmax, stuff like that, partnering with the likes of MTN, trying to compete with the likes of Netflix. It's not an easy task for them. So they will need a big brother as well to be able to succeed into this competitive market, especially the African market. And as we said, this is not an easy play for them, but will it be a good thing for shareholders? Most probably it will be.
And they need money, Makwe, because even after that announcement, there was another announcement that they put out, basically detailing the investment that they have made into Showmax so far and the investment that they will need to make by the end of the financial year. So it's going to be quite interesting as to how shareholders have received this offer. Maybe they might want more at some point. We don't know, but we'll be keeping a close eye on that. Let's go into Glencore. It came out with a production update today. Of course, a diversified miner, quite a lot of different movements there, mixed performance between the different commodities. But the miner says that 2023 production was in line with guidance. What did you get from that production picture?
It's true, it was in line with guidance, but the guidance was low. So that's not
Ah.
supposed to excite us. So the question here is going forward, because we buy the stock going forward, will there be demand? Now we have to ask ourselves about these interest rates. Will we have some soft landing or not? Soft landing is okay, but all it tells you is that, listen, the economic growth is just stable, but inflation is cooling off. So still it's not exciting. China, who happens to be the major user of those commodities, so far we can see they're not too sure whether they want to give us a bazooka when it comes to millers, or they'll just continue to do these bit and pieces. So it all depends on the global economic growth, because most of their metals easily call them industrial metals. They do well when the economies are doing okay. So yes, going forward, it all depends on how global economies have to fare. And we have seen the European Union, or the Eurozone itself, they just narrowly escaped a recession. So it's not looking that great. So, but yeah,
All
must we
right.
be excited? We're okay.
All right. Well, let's get to your stock pick for today, Makwe. What are you picking?
I'll go with Pepco. We know these are the owners, is a discount retailer. We've seen their Q1, a report showing that they managed to increase their sales by 7.2%, and that's despite the challenging macroeconomic conditions, including our port inefficiencies, and most importantly, the guys continue to gain some market share.
All right. Well, thank you so much for your time and for your insights on what has been driving investor sentiment today, Makwe. That was Makwe Masilela from Makwe Fund Managers.